could you all join me in welcoming Peter Rex to campus? All right, Peter, so maybe give us a little bit of your background, sort of where you're from, how you got to Georgetown, what was your Georgetown experience like, and sort of walk us through just early days of your career.
Yeah, absolutely. Well, first of all, Matt, thanks for having me here. And yeah, I'll give you a quick snapshot. I'll be really quick with it, though. When I was at Georgetown, great experience. I was a philosophy major and political philosophy, so you guys already got big advantage on where I was when I got out. I didn't have any networks or connects when I got out of there, so I was thinking about going into admissions or something. I was very idealistic, but those doors were kind of closing on me, and I realized through different circumstances that I was supposed to go into business. Kind of figured out, the approach into business for me to get into the big times would be through real estate, because there I could take out debt. When I approached people for money, they were just like, "Are you joking? Like, you don't know anything about business," and which was true. So I ended up using kind of different hacks or techniques, like I used the interlibrary loan system because I didn't have cash at the time. This is in New York, upstate New York, but I'd get all these books mailed in to get myself educated on business. So like I said, you're way ahead of me, and slammed through like a lot of books. Came up with this idea. If I use real estate, I could just say, "Hey, this deal's good. I am an idiot. You're right, but that deal's good. So let's do the deal." So that's how I got going. So within about 24 months of when I decided to make a move on it. This is after coming out of Georgetown. I had about $5 million in assets, and things were great, and I was already worth $1 million, and this is all true, by the way. And then the market crashed in 2007, 2008. Yeah. So I am a real estate guy. I do understand real estate well. I'm also a technology guy now. I live in the West Coast, and I've been working on technology for about 3 years now. So, anyway, so I'm kind of interested in convergence of the two fields. But I ended up taking the great financial crisis, which you guys are probably too young to ever feel what happened there. It's the largest crash since the Great Depression. And I was like a poster boy. I had all these loans because that was my strategy, because I couldn't get any money, take loans, all personal recourse, millions. I was a negative millionaire, many times over. There was no way I could ever pay back this debt. It was impossible. And then top it off, I was at Harvard Law School because I decided to go to Harvard, get a network from there. And I never went to class or nothing like that, but I was, I was hustling, doing businesses, all this crap, So anyways, that's kind of how I got into real estate. Now I got out of the crash without bankruptcy because I was able to hardball negotiate with a lot of hedge funds bought up loans. So I was dealing with hedge funds, kind of sharks and stuff, loan sharks, contacting me, trying to litigate with me. They probably didn't realize I was also studying litigation at the time. So I was fighting back. I didn't have money for attorneys, but I was pro se on probably like 40 different litigation type things with them. So anyways, I negotiated my way out of everything. So the best day of my life in business so far in money was when I went broke again. And I was like, man, I'm broke again. No more negative millions. So anyways, but that's all true. And then
let me stop you there. So what was the lesson learned for you, or the lessons learned when you were like looking at yourself and as a negative millionaire? Right. That brings clarity in one's life.
Well, I started thinking, because I was so all in on my business, that I didn't own anything, like literally, which is crazy. I just had everything in my business, 100%, to the point that I had this style of I still wear sandals, but I'd be wearing sandals, and I had just kind of like a system of clothing. So I didn't have a lot of cost on clothing, very low cost on food. I had millions of dollars of real estate. But then I had everything 100%, and I didn't buy a condo, didn't buy a car. I'm very an extreme person type. That's how I am. But anyway, so the first thought I was like, man, I could have bought 4 Ferraris, and I was like, I could have bought at least a condo or something. But anyways, instead I'm completely broke. I had taken out loans while I was crashing from friends, which where I'm from, they can't lose the money. So I had to pay this money back no matter what. And the money was compounding. I got a call from one of my friend's moms who was a widow, and she had gotten insurance money. She had lent me some of it. She called me to say during the crisis she heard I was under a lot of duress so from her son. And she said, listen, Peter, don't worry about it. She couldn't lose the money. I was like, listen, no, you don't worry about it. I'm paying you back 100%. You're going to get back plus the full amount of interest. And I actually paid her back full compounded interest, and I gave her a huge extra bonus amount of money as well once I got back on my feet. But anyways, so lessons learned. There's a lot of lessons, man. Don't get over levered. Know where you're at in the market cycle. I didn't know anything about business. That was the problem, So it was, it was extremely bad experience. I thought my hair was going to fall out at one point. But anyways, the other lesson is I then came back at it right away. And everybody else was down and depressed in the market, if you remember 2008, 2009. And I wasn't, because I was just kind of like, man, I'm going to win no matter what. I just fought off all these guys, basically beat them, and I'm coming back at this market, and I know everyone's down. And I knew financial history by this point, because I'd read so many books, that I knew that this was like an inflection point in financial history that was a great time. So I went in, and probably like the worst time to raise capital I raised during a certain period, I raised about $300 million in cash and came in and bought about $1.5 billion or more of real estate. So a pretty aggressive play, I would say. I was certainly the only guy. I think at Harvard everyone thought I was like a complete moron, but I was certainly the only guy that did anything like that. But yeah, and that the company's still there. We still have over, so now fast forwarding to where am I now? The company has about 400 employees or so. I have 2 different technology companies in stealth mode, but they're all in the real estate space. I can talk about those. I'm just not going to give too many specifics because those are going to come live in the next 90 days or so. And we're being very secretive about it because I've market tested these things so heavily. I know they're working, and I don't want anybody in the West Coast, everybody copies each other on technology like right away. So you got to be like careful with it. So we're being more like close to the vest on it and stuff. So. Yeah, so that's it. We can get into that. I mean, I'm selling a lot of stuff in real estate. Doesn't mean it's not a good time for you guys to be getting in, because Matt mentioned that. It's always a good time to get into business or opportunity. You just got to be like, outside the box. You don't have to be a whack job like me, but you just got to be outside the box. And thinking about things from angles. Like I was saying, Matt, exploit markets, don't exploit people. Serve people, but exploit the market. The market's going to be right now. You got to be realistic, right? I wouldn't want you to go through what I did back in 2007. It was like 10 years ago. But the market right now is probably towards the top. Who knows? Maybe it goes up a lot more. It could double, right? I'm selling a lot of stuff. I'm like an ultra long-term hold type position. And I'm probably selling about $700 million of assets. So I'm taking a significant amount of cash off the table. And I'm putting a lot of that stuff into, I'm starting an investment fund. I'm putting about $50 million into that. And I'm putting some other, which is a different type of company that we'll come out with eventually. But I'm putting some other cash, a significant amount of cash into technology stuff too. So, but I'm still going to be holding a significant amount of real estate. So I'm not, completely short. I'm heavy on the markets I really like a lot are ones where they have very good fundamentals. I'm a very fundamental type person. And I look at population growth metrics, where are people going, but where should they go based on where is opportunity going to be? That's where people will generally go. And where is there going to be eventually constraints around land use, whether it's coding or environmental protection, stuff like this. And then world-class amenities, which could be like Austin, Texas, right? I took huge positions in Austin, Texas a while ago. I'm not from Texas, but I took a lot of positions in that area. I'm not from Florida. I bought a lot of stuff down there. I'm from New York. But anyways, I just kind of go where I see pockets, and we have like a pretty large asset in Miami Beach. I think Miami Beach is probably a good spot. We have about not $80 million asset over there. Might be selling it though, but I still think it's a good spot. I'm only maybe selling it because Miami, they pay like crazy amounts, When times get good, Miami gets crazy. So, but yeah, we could jump into technology stuff. That's stuff about,
Yeah,
I'll let Matt guide.
I mean, maybe you could talk about, how did the technology begin to permeate your thinking? Like you just come out of this recession, then you re-upped on all the sort of distressed stuff that was out there. When did you say, look, this real estate stuff isn't where it's at, it's the technology associated with it? I mean, what was that thought process?
Yeah, so I had a very different way of doing real estate, say, compared to most people coming out of business school. It's probably fair to say. Or in general, period. All my colleagues I know are coming out of schools like this, or say similar colleagues that are playing at a high level. They had a very different background than me. Because I grew up in upstate New York, and I worked construction and stuff like that, and I came from the operations side. I actually didn't come from really like the capital market side. Most of them come from like a Goldman Sachs position or whatever, one of these groups, and then they go in like that, right? I came from the ground. Like I was actually running turnovers on apartments, I was running maintenance, I was running management, I did all that stuff. And then I did the whole chain too, I ran all my own contracts even before I was a lawyer, and did everything, So I kind of had like a really like tangible feel on everything. So at a certain point, as a quick segue was when I kind of got out and I was like back to broke, you know what I mean, feeling great. Because I went from like a negative million to back to broke, you know. And when I got back to broke, I was like, you know what, I'm not really broke now. I've lost all my assets, but I'm rich in knowledge. I know I got crazy grit, so I ain't gonna give up. You can basically kill me. I'm not giving up. So I'm gonna keep coming. And I also knew a lot of the aspects of finance, litigation, like everything, law, every area I kind of had a good grasp on. But at the time I needed cash, right? So I had this like side hustle when I was at Harvard, and I recruited a computer science kid to do it for me. And within like, it sounds crazy, but within like 2 days, this thing was like, I paid him off for the full amount that we had set up on the contract within the first week of the launch. It was an idea around like leasing type stuff, and it worked immediately, and cash was just coming in. It was like a technology thing for that time, tech-enabled type play. I never did anything, never left my apartment, and didn't do anything. So I started bringing some cash. It was so effective that like Craig Newmark from Craigslist, because we were leveraging that as a piece, called me like a few times. I thought it was someone that was working on it told me this, hey, this guy Craig Newmark called. He's Craig from Craigslist, and I was like, it's probably a prank, you know?
Right.
Because some of the local competitors were trying to figure out what I was doing, so I thought they were trying to mess with me. But then I listened to a voicemail, and I matched it to a thing I heard online. I was like, it is actually him. But I didn't stop what I was doing, though. But
did you ever meet him? Just out of curiosity.
No.
I didn't even know there was a Craig.
Yeah, it's Craig Newmark. He lives in San Francisco. Probably, maybe I've walked past him because when I started a technology company, I started in San Francisco 3 years ago. But yeah, so that was kind of a first glimpse. And then as I was running all these operations, I always tend to think about things, how it could be done better, which can be like, kind of like in a way, it can be annoying for my brain because I always see something and think, man, this thing could be done differently, but it's a good thing from a technology perspective because I'd be seeing all the maintenance and all the stuff, how it's going down with leasing, how they run construction, and think about, man, this could be done so much smarter, and like you can route this very differently. And you could use market mechanisms to drive efficiencies and reduce overhead across all the properties. And with, as I see, and also I have run all my own, I don't run all my accounting now. I have a person that runs that all, but I used to run it all. So I know like the overhead growth on like a lot of the carry costs, plus the managerial overhead is significant. It's like almost like 50% on some of the people in companies. In my company, it wasn't unique at the time, so I knew that this was an endemic issue to the industry. So that's where I got some of these ideas and that was probably like, it was a while ago when I started getting those ideas.
And so were you sort of a tech geek, or were you like, I'm a technophobe? I don't, where are you in sort of just as a general human being relating to technology?
Yeah, I mean, I was a philosophy major, and I just read everything, philosophy and government, and I just would read everything. I was more like liberal arts. So even business to me was like, I didn't know nothing about business. I never thought about business once in my life until I graduated. So that was all like brand new. So the idea of me going after something brand new again was like, whatever, I'm just gonna take it down. Yeah.
So then maybe talk to us about Trustwork and Makerise. I think Trustwork came first, but I'm not sure. Just of sort of what. Yeah,
so Makerise is just the name of like kind of like the ecosystem that we came up with, and because there's a lot of companies that we have. InvestRes, which is kind of an investment holding company, ResProp, which is a management company, and then we have 3 other companies that are coming through that we've been working on. So those will also be uniquely branded with their own way of doing things. So, and all of them have a trajectory in the multiple billions as well. So, and they've got the capital because I've self-financed it, so I know they have the money.
So what areas are you seeking to disrupt? I mean, without the volume.
Yeah, no, for sure. I mean, look, it's everyone. There's a number of people trying to do this. It's no secret in Silicon Valley that real estate is one of the few things that hasn't been disrupted. No one's cracked real estate yet. So almost everything's been cracked. Real estate hasn't. Healthcare is another one, but I'm not touching that. There's too many damn regulations. But I also don't have a unique competitive advantage there anyways. But real estate hasn't been cracked. I don't know if you guys have heard of Y Combinator, Sam Altman, but he's the head of Y Combinator. He's mentioned that as well. I mean, everyone, it's pretty much known. But I don't think anybody's really cracking it in the right way. They're not coming ground up. They're coming too top down. They're coming from like a software geek standpoint. Now, I do understand software, I would say, at least competent level in every aspect of it, including architecture and design, everything. And then I also understand product management, also design as well. I would say the combination is what's going to crack it well. You got to understand the operations really well, because not every operational flow needs to be changed. You need to keep the ones that make sense and change the ones that don't. And the initial area I'm going to go after, or I'm already going after, is going to be the maintenance services side, because that's a cluster. And it's not an easy undertaking. It's going to be a bear. Yeah. But the market's, getting ready for it, despite regulations in California trying to crack down on Uber and Lyft or whatever. Regulations can't stop the market. The market is saying that people want to have the independence to work on their own and run kind of their own sort of entrepreneurial type position, working on a platform and be multi-platform. Like sometimes they'll be on Uber, sometimes they'll be at DoorDash. Everything's set up like that, right? So it's like, it's already happening to most of the consumer market, but business hasn't been disrupted too well. The other thing is I don't think property management is going away. That's another thing I would say I disagree with some of the technology industry on. I think they think there's like this miraculous way you can remove human beings from decision-making processes through AI and stuff, and it's just not true. There's no evidence of that, actually. It's just, it's kind of like maybe what they hoped for, some of them, but it's not true. It's always that AI or machine learning it's leveraging human output. It's kind of like farm machines leverage someone tilling by hand, right? Property management is going to stay. It's going to become more levered, become like farming. So it'll be less manual, more leverage. Farmers don't go away, though. You still need someone running the damn machines, right? So, and people, I think in the future, and this is kind of my bet in general that I've made, and I'm continuing to make, is that people in the future don't become commoditized. This is the disagreement I'd have with a lot of Silicon Valley as well. They don't get put down into like the position of like a horse to a car. Like actually what ends up happening is they have a tough transition, but they become knowledge workers. So they kind of move up chain and they start using their mind to kind of move things around and get things done. And it becomes more leveraged output. Because machine learning is pattern recognition type technology. That's really what it is. And it gets much better and smarter. It can cut through like simple tree logic, which is like if A, then B, then C, then D, then E, then F, whatever. That is kind of how most things are working currently. But that can be skipped through different heuristic-based rules and systems that you set up, which is machine learning. That could skip right down. And we're leveraging that in the product that we're coming out with, actually. We're leveraging also visual recognition technology heavily. So if you take, well, I won't get into too much of this stuff because I don't want anybody trying to get into it. But so some of these ideas are just right at the edge, we have at the edge all the technologies we've selected, but some of the stuff we're implementing is going to be right at the edge. But it's not over the edge. I know this stuff works. So.
Now, as you're a long-term holder on the real estate side, are you on the tech side? Is it something you want to launch and grow into a company, or you want to get it to a point where you get bought?
I've never proven too good at selling anything. I think even my partnerships, I don't tend to sell them. That's another thing I would say to you guys. Pick good partners. It sounds stupid or it sounds so trite, but it's hard to do. You gotta really be careful. It's kind of like a wife or something, right? You want to really think about it, or a husband. But anyways, it's, like my original partners, man, have been with me for 15 years. We came from freaking nothing. So I still got those guys with me. And they're phenomenal. And partner I picked up out of Harvard still with me. He's been with me for now almost 10 years. So, most partnerships I think last like a year on average or less. But I think I'm a long-term type person. I don't have that many friends, but my friends that I have are pretty careful with. I tend to go along with them. So we have new partners coming in that are also, I think, are going to be very long-term. Like McGuigan here runs all my media stuff, and he's absolute top 1% from Hollywood. So he's a beast. And also the type of guy I'd love to partner with long-term. So that's just kind of my mentality. Now, when it comes to businesses, I tend to, even if I think about selling it, I'll wake up the next morning and think about how I can do something different with it. But I'll get like a proposal from one of the guys in our company, one of the partners, to say, hey, we should really sell this. And I'll be like, oh yeah, that really makes sense. And then I'll go to sleep in the morning, I'll have like this new idea about how we can actually do it differently with it and like leverage new systems and technologies and how we can make things work differently. But assets, I do sell. Yeah. So, but I do tend to go long on assets as well. But with real estate, I am selling a number of them now. Part of it's that I'm still younger. I'm as young as you, but I'm 37 now, and I have a lot of ambitions, and I'm kind of at the very beginning, I would say very foundation of what I'm up to. It's like very, very, very early for me, so I'm like, because I'm planning to work another 60 years, so I'm a workamaniac. But anyways, so for me, it's like I need a significant amount of cash for a lot of the things I want to get pulled off. And I've done very well by investors. I think I've returned over $500 million in cash to investors, which is a lot more than I think Uber has possibly. But I'm just kidding. But no, those guys are awesome too. But yeah, I mean, it's hard to argue with the cash. You know, you turn that much money to investors, I could get money from them if I wanted. But I also have a lot of my own cash too. So
I'm gonna ask one. Okay, perfect. Zach, go.
I just had a question. You talk about your creative process and kind of from the initial inception of a concept. How does that become something that you really want to pursue? And just kind of expand upon what your personal process is.
Yeah, so I think I probably a different way to do things than most people, at least I haven't heard of anybody that does it this way, is I try to get to, my first in my life, I try to figure out what am I trying to do with my life, and I have this deathbed thing I do where I'll picture myself on my deathbed, everyone's gonna die eventually, right? And think about what am I gonna be happiest about what I did in my life? And what am I gonna take with me to the next life? You know, I'm Christian, so I believe I'm a Catholic Christian, and I believe there'll be some kind of thing after, right? So what can I take with me? And that probably, maybe that's why I'm also good with long-term relationships, I don't know, because I tend to value people a lot. But, so then my thinking is serve people, that's what I want to do, right? And that's why it wasn't totally intuitive to me that I go into business, right? That kind of came as a last thing. And, but then when I think about what the hell am I going to do, I always think biggest is kind of my mantra. And so I have very long-term plans, or, you know, like really very long. Shockingly long, so like 1,000 years. So, I mean, I've got a 60-year plan, very well detailed out. I got, just 60-year kind of like what I want to get done, 30-year layout, what I want to get done, 10-year, so. And then from there I evolve those and I update them. And I try to think outside the box when I do that. Also, along the way, I realized I didn't have global knowledge well done, and I wanted to get into every country eventually with what I'm doing. So I went to 85 countries for a year and a half. Fortunately, I just had a kid and my wife as well. So what the hell are you doing? They came with me, not to every country because some countries aren't safe, but so they'd stay in one spot and I'd go boom, bang out a bunch. And I had 1,000 meetings in those countries. So it was just a logistical nightmare. But after a year and a half, I now have a good understanding of the global footprint, like what's out there, how economies work from the ground up. And so I want to make, so when I think about the creative process, it's very nonlinear. It's extremely intuitive for me. Intelligence is really intuitive, and then your brain kind of figures out your intuition later through, I think, patterns and trying to figure it out and try to make sense of what you saw. This is my theory on intelligence anyways. But I've also read books on AI, and if you read, there's a good book by Herbert Simon on AI, artificial intelligence. He was the founder of artificial intelligence, but he makes a lot of comments on there which corroborates what I'm saying is intelligence. I think trusting your intelligence, people say your gut, your intuition. But yeah, using your intuition to kind of figure things out when you have an instinct to be like, I wonder if I should do that. And then maybe dig in a little bit deeper. And then oftentimes I'm completely wrong, but sometimes I have a very big cojones, and sometimes my cojones are bigger than my brain. So I get myself in some trouble. But I think getting after it is the best way. Once you kind of have this idea, you got to push in. Maybe not as quick as I do sometimes, but if you throw yourself into it, your feedback loop is fast. You start realizing if your idea was really stupid. But if you push in, you might feel resistance, but see it's not as hard as you thought it was. And you're like, I bet you I can break through this. So you might keep pushing, and then you might be doing something, someone will be like, he's an idiot, why is he doing that? But they don't see what you see, so you just keep moving. Like when I went into tech, right, my advisors were like, I just tabled that, I wasn't gonna bring it up anymore, because I have some advisors I pay for the company, and they're awesome, and been with me for a number of years actually, and they're complete rock stars financially as well. They've crushed it. And but I remember talking to one of them, and he was just, I told him about some of these ideas on tech I was going to get into, and the company was booming, another company, and he was just like, forget about it, stop, just forget about it, get it out of your head, focus on what you're doing. This thing is growing like crazy. Then I was like, but I already had this idea, and I was already kind of onto it. So I was like, I just said, he was also said other things. He was very adamant of just shutting that down. But I figured out a way to do it anyways. So, and the company 3x'd in size while I was hitting 85 countries. and when I got back to the States, I landed in San Francisco, and I told my administrative office, give me a spot for my family in the location where the most money has been invested for venture capital. So that's where I ended up moving right there. I didn't even know where it was. Just give me the address, just showed up, boom, set up shop, and just started grinding. So, but yeah, so my process is a little bit different. I wouldn't recommend it necessarily unless you unless you got some, ability to go through a lot of duress and stress, No, I'm kidding. It's, you just got to do your own way.
Simone.
It sounds like you're focusing on property management and servicing a need. But who do you see as kind of that customer that you're servicing? Is it the real estate professional? Is it the consumer? Is it the owner of the portfolio? Who is kind of your target audience for your product?
Yeah, so I mean, it depends on the product, So of the ones that are in, that we're working on that are in stealth mode, the answer would be that there's going to be layers, right? But if you think about them as, actually my software engineer, my head of architecture is a great thinker. He's like he's pretty out there, but he's excellent. Anyways, we were going over some things architecturally. He actually helped me to see some of these things in a little more abstract sense. But if you think about it, you have levels of consumer who consumes your goods. So say if it's, say you have a maintenance service, it could be like at your most basic level could be a homeowner, the actor could be a homeowner. But if you scale that idea of a homeowner up, what do you have? You have potentially someone who's an enterprise that's consuming services on scale. So the same needs you have at that basic unit level just get expanded out and get more complex. But we always try to start at the most basic, common denominator type level. I call it the most derivative level of something, but there's a lot of ways you can think about it.
And then how did you assure common quality of service across the board? Because I know you service different markets. And what I could see from your platform is that you have a wide variety of offerings, but how do you kind of assure the common baseline?
Well, the products aren't out. I think you might be talking about Trustwork. Trustwork's kind of in, I would say, hold mode right now. So what's out there, there's about 10 million in revenue running on that. It's not like a complete disaster, but there was a lot of things that's not quite focused on that, and I'm not going to rehaul it right now. I have 2 other things I'm working on. So that's kind of the short story. I think you're talking about Trustwork as a product. So the 2 other products are, they're very focused in on like a target audience, like you're mentioning, target audience.
Dylan.
Sure. So from that sort of world tour you did, what were your biggest takeaways, and maybe how you think those could be valuable to someone like in our seats who haven't had that opportunity yet to see the world?
Yeah, I mean, I'm assuming a lot of you guys want to get into real estate, and you happen to be in the United States. I don't know if you guys are all from the U.S., but I think one takeaway would be that USA real estate is probably the best value real estate, on average, compared to other countries, for the safety of the position you can take. I mean, if you buy a like kind, cash flow or income level in Europe, you're going to pay double for that. So, but which economy is stronger? European economies or the American economy? The answer is the American economy. So, now if you buy an economy like Texas, which one's stronger? Texas versus the other states? Texas is stronger. So you're buying underlying cash flows of an economy, essentially. So I think that and I'm not saying Texas real estate is going to outperform everything else. I'm just saying, generally speaking, you're buying something that will represent as a basis of, somewhat of a derivative of the local economy. And if those things are trading over there in Europe, and you do believe there are such things as global capital markets, then things should converge. I don't mean that we have to go up. Maybe they come down. I don't know. So I don't want to overstate this position, and I haven't heard anybody else state this, so I'm kind of skeptical of my takeaway. But I'm pretty sure what I'm saying. I know what I'm saying is true because I've been there, but there are capital. So you have regulations that block flows of capital between countries perfectly, right? We have FIRPTA, which is. It's basically was invented to block Japanese money from coming in the 1980s when they were buying up Manhattan. And it's still there, and it blocks foreign investment from coming in. So that prevents capital markets from converging perfectly. But money is fungible. I mean, money, you buy other stuff, So I've heard, actually, I was telling this to somebody, I heard the Japanese were buying through creating shell entities. I don't know if this is still happening. But they were actually trying to buy real estate through shell entities where they'd fund money and then buy large positions in REIT stocks of the U.S. to get better cash flows than they were getting in Japan. The other thing is Japan is trading at probably double, same thing like Europe, same thing in Hong Kong, same thing in Singapore. So now those I would consider developed economies that are somewhat stable good government, reliable government for the most part. I don't know what's going on in Hong Kong these days, but generally reliable government, even in Hong Kong. And it should probably, from a financial perspective, reflect the same price, except for regulations. So I think that USA Real Estate is probably still a good, I would say USA Real Estate is still a very good long-term bet. I would say now I'm more in, I'm in a conservative position on real estate. I'm a sharpshooting. I actually, a year ago, maybe 14 months ago, I let go most of my private equity office, almost all of them actually. So, which was tough actually, because I knew some of those guys and we were buddies, and hopefully they're not pissed at me still. But I had to shut down almost all the private equity office because I told them to put it on hold, start sharpshooting about a year and a half ago, and they just kept getting deals and deals, and I'd have to block them. So I spent most of my time blocking deals, which I'm not trying to do that. I'm trying to approve deals that look good. So I just shut it down. Now it looks like the market's still gone up over the year, so maybe it's too early. But we haven't done as many deals. We did, the last deal we did was in Boise. So why Boise? I never hear anybody talk about Boise. And it's pretty damn stable, and it's a good secondary place if tech is overpricing certain areas. San Francisco is really hard to live if you don't have a ton of money, and same thing in Bellevue, where I operate out of Seattle. It's pretty expensive. And a lot of people are moving to Austin, Boise, Portland, Denver as secondary plays. People are moving out. It's also high quality life. So we bought a deal in Boise recently, but that was 5 months ago, man. So I mean, we were just I completely, and even that person has moved on, and he was a good friend of mine actually, and we're still buddies for sure. But that was it, man. We're really stopped a lot of our deal making, so. But that doesn't mean there's not a place for you guys, man. You just got to figure out what is the play now in real estate, right? It could be a great time for you guys to get in, join a deal shop where you're actually don't have all your. Maybe though I would do it if I was in your position would be, I would join a deal shop because there's a million of deal shops, right? They all have so much damn money they're trying to buy stuff. That's why I'm selling stuff too. It's because all these guys are lined up. And I would go and work at one of those deal shops and just basically let someone else take it on the chin. Instead of what I did, right? If I knew better and I was in your position, I'd be I'd go work at that, see how it all happens, get paid to learn. It's like a paid tuition. And you're going to see a lot of activity because people are going to be doing deals like crazy. Yeah. So you'll see a lot of deal making, get on the ground, figure it all out, figure out how it all works. Volunteer to get paid less so you can do more. Take half the salary so you can do models, you can go out to the field. You can do basically anything if you take half the salary. Because they'll be he's pretty cheap. Send him out wherever, so.
Jeffrey.
So, back when you were at Harvard, you said you started a company in college. So what advice would you have for us as undergraduates in terms of if we had to think about starting a company? How challenging was it, and what did you learn from it, and what should we know ahead of starting a company so that we can make it as successful as possible?
Yeah, I mean, I think there's too long of an answer to that, but I'll just try to give you a differentiated answer than you'd hear from a different place. Think about things in more 7 to 10 years. So don't be thinking about things in 3 years. Forget about the first 3 years. It's just bloody mess. You're gonna get blasted. Even if you get lucky and you start hitting a trend, eventually you're gonna have to learn hard, Now, you guys know a lot already, especially because Matt's training you guys and educating you and all, so you'll be a leg up, but you're still going to have to learn, and you're going to make mistakes, and your blind spots will be different than my blind spots. You know what I mean? I have my own blind spots, but you'll have your own blind spots, and you'll figure out what those are over time. But about after 3 years or so, 3 to 5 years, you'll start hitting your thing, and you'll kind of figure it out, and you'll kind of get into the black. You'll basically go from being in the red to being in the black, where you're you're starting to make money. And then 5 to 10 years, you can really get your systems down, and make it happen at a larger scale. So I think thinking and expecting that to be the case and planning around that that's just the way to do it. That's probably the truth, what I'm saying. And interestingly, I read recently all the shareholder letters of Amazon, because they're local to me, and I farmed them for talent. So I was reading all the shareholder letters, and I finished them off, but he mentions looking back, at some point Bezos mentions looking back that he had noticed that all of the stuff that really worked took between 3 to 7 years, more towards 7 years before it actually worked. So, and I think AWS, which is like their key cash machine, is like 7 to 10 years before it actually worked. So
how do you not kill something prematurely? Like, that's a hell of a long time in tech world.
Well,
7 to 10 years.
yeah, I mean, I would say, yeah, it is, but that's, Peter Thiel said the same thing, actually. He said something like 10 years. He won't even invest in someone that didn't have a 10-year. So I do think, but I don't plan on a linear route. Like, you'll make a plan, and it ain't gonna happen that way. You know what I'm saying? I didn't think I'd be in San Francisco and then Seattle. I didn't think I was gonna do any of that stuff. I didn't think I'd be down in Texas doing deals. So don't plan on a linear route. Just kind of have like a vision of an idea of where you want to get and try to abstract it up a level. So that way you're not married to too many of like the details on the ground, because those are going to change. And when you go, you're going to have to iterate, and iterates look like new companies. Some of them, like when you iterate, it's going to look like a brand new company. So yeah, I mean, just don't be married to anything. When you launch, you're doing something. I have a lot of heuristics in my mind of how I do things, so they kind of come out randomly. But one of mine is first I think about it, but I launch aggressively. But then I also retreat fast. So I'll jump in, I'll try to get all my stuff and get back, and then I'll launch again. So, but the art of the retreat, I think, is probably understated, and because you have to have humility to recognize that you screwed up, you made the wrong move. But the faster you come to that realization and you retreat quickly, you can get all your resource, boom, and you launch again. You keep coming because you learn. It's like a learning loop, you know.
Sam.
I'm coming from San Francisco too. Met Craig Newmark, great guy. And in terms
Tell him I said sorry. I was a young guy. I didn't know any better. So
in terms of the startups, I'm really curious about your customer validation process, because for some of us who want to start startups that are not using, our own capital or friends and family, what did your customer validation process look at? Because I know that VCs and angels are super critical on, forecasted revenue. So in terms of the real estate space, how do you validate that space and say, okay, this is great?
yeah, I mean, so for me, to avoid me getting into, out in the middle of nowhere and thinking and just staying grounded, what I do is I just scratch my own itch. I just do stuff I know is a problem that I have or I've had. But that might not be an advantage you have necessarily, but you might actually if you think deeper about problems you've wanted to get done. But if you go after that, then you scratch your own itch, and then what you do is you try to, then from there you come up with how you would solve it, but then open that up. Now how do you solve it for other people? And then from there, you focus on who are all these people. Now, of all these ones, which one is going to value it the most, or is easiest to get to, or I'd be the most differentiated with this product as I deliver it to them. So that's kind of how I think about it. And the other thing is, if you wanted to start a company now in real estate and tech or whatever, I mean, it's like one of the best times to do it, probably, from getting capital. There's so much capital out there for that. I mean, I could be a capital source too, right? I mean, it's probably unlikely. I mean. No, I'm gonna be cool, man, but you probably won't get the money. So if you get the money, yeah, I mean, it's probably gonna work because I'm gonna believe in it. But anyways, we are, open to investments. I'm open to investments. I have capital we could toss in, but I wouldn't even worry about me, man. There's funds that just have tons of money right now, and it's like 10x whatever it was last time, right? So the amount of money these funds have. So if you wanted to, I mean, you could just effectively get paid to just go test. As long as you come at it swinging real hard, someone will bet on you, I bet you. Just have enough VC meetings at this point. You don't even have to have a customer validation probably, as long as you have a good story and you're able to just, show the grit.
So is the fundraising really a volume game? I mean, you got to have a good story in the grit, but is it really just volume? Like you get it in front of enough people, you're going to find money.
Yeah, I mean, I don't, so the general answer to that question, I don't know, but it's probably a volume and quality game. From a durable standpoint, it's quality, but today in today's market, it would be, I would say it's an opportunistic time where you could probably get capital. I'm just trying to put myself in your guys' shoes. I'm not in your shoes, but I'm trying to. I'm thinking like, what would I be thinking if I was there, right? As like a hustler, entrepreneur type thinker. And I would be like, man, it's pretty easy to get capital right now. If you're trying to get in, I mean, it's probably one of the best times to get capital. I'd probably go pick up that apple and run with it. I don't know. It's not what I'm doing right now because I'm in a different position. But so it's easy, you know what I'm saying? But that could be an opportunity there. You probably ain't going to see it again in 5 years, but then in 5 years it'll be a different opportunity. So.
Jim.
I was just going to say, can you talk about the transactional component of real estate? Obviously, Zillow and the rise of online buying, was that something that you ever explored 3 or 4 years ago, just given it's a pretty inefficient or high transactional cost business?
Right, you mean like kind of like
The brokerage
Opendoor or whatever? Is it
Yeah.
Opendoor? The guy? Yeah.
Yeah, the brokerage fees are like 6% for like a home buyer, and obviously Zillow now is trying to-
Yeah, no, I mean, I've thought about it, and so I haven't made any moves in there. I'm not going to. I would say pretty certainly I won't do it. The reason why is I actually think brokers create a lot of value, and they don't get paid that much anyways. I mean, they always look at, the problem is like people look at things in absolute terms, and that, yeah, absolutely, 6% is a lot, but in relative terms, I think brokers on average, most of them don't even make money. So they're not making a lot of money for all the service they bring. I always valued brokers a lot, by the way. That was another trick I had, was I would leverage a very small team by having great relationships with brokers, and I'd pay them extra. I'd pay them like 30 or 40% more, sometimes double. They got me good deals because they have all the sourcing. So, but do I think there's an opportunity there? Yes, there is an opportunity there though. Now, will it be all houses will be sold like that? No, but ones that are more probably look similar or whatever, or are more prone to that will be easier to pick up. Will brokers go away? No. Will they become leveraged? I think they'll become more leveraged in the future. And you can cut them out in certain circumstances. But I would say I have no additional advantage to play over like a Zillow. So I would never want to compete with a Zillow. Like Opendoor's, Opendoor's in a tough spot, man, if Zillow keeps coming. Like Zillow has a crazy amount of market power. They have crazy amount of data. They start applying machine learning to that. I mean, it's going to be tough to compete, man. I definitely wouldn't want to be an investor in Opendoor right now. So that's why I'm not going involved. I'm not going to go after that space. But there's definitely something there.
Shannon.
So other than selling now that we're kind of towards the end of the real estate cycle, how has your strategy, investment strategy shifted, kind of starting more of the rise to now kind of we're hitting the peak and starting to go back down?
Yeah, I mean, it's, we're virtually not buying anything. I've done a deal in 6 months. I mean, we were doing deals like crazy the last 12 years or 10 years or whatever. So I put a halt on it. But, I could be the stupid guy in the room, and I'm happy with that. And that's what's going to maybe happen, actually. The market could double, I don't know. Like, I'm basing this on a number of factors. Some of them are from opportunities I see, so it's very personal. So I have to think about the use of, say, $100+ million of cash or whatever towards continuing to keep it there or moving it out towards here. You know what I mean? So I got to think about that. But I think from someone else, if they're just looking at it, is it still a good relative investment? Maybe it is, and maybe it does double. I could think of a scenario where it could double, and I still am going to have positions. So if it does double, I'll benefit from it. But so that's kind of my answer there. And I think most people, some other people that are sophisticated are thinking it is at the top, right? Some people are thinking that. Now, I'm probably one of those, I'd say. But am I right? I don't know. So, the market makes everyone look like an idiot. So I'm not going to come out and say, like, it's definitely coming down.
So why hasn't, and I'm going to go, I think there's a technology's just not been cracked, or real estate's just not been cracked in technology, right? Or, why is that so? Is it just the informational inefficiency, the lack of data? Like, why has technology had such a difficult time penetrating?
Yeah, it's actually a really good question. It's very valid. It's something I've asked myself that. There's a number of reasons. I'll probably just try to be surgical in giving you what I think would be the most important reasons. Is one, I think that most people from, say, investment world don't understand operations well enough. So they have made some goes at it, but they've gotten blasted and they haven't done well. So that's one thing. So they don't have that understanding of all of what's happening there well enough. That's a factor. Another factor is the kind of gig economy, which is sort of an entrepreneurial type economy that's emerging, is emerging still. So, and most of the plays, I think, depend on that thing's coming to be, and it's not quite there yet. So, I think like Handy was out like maybe 8 years ago or whatever, which was doing some sort of a marketplace thing around stuff. You need things done. I don't know if you guys have Handy around here, or not Thumbtack, but TaskRabbit. Yeah. So some of these things were there before, but the market's just wasn't there yet. But if you look at the numbers, this is exponential growth. So it's like 10 million people were in like 5 years ago, and now it's like 60 million. Okay, so what's going to happen 5 years from now? It's going to be like how many more people? Not going to be everybody, but once that's there, then you have the ability, you have the liquidity of people that are potentially out there that are entrepreneurial, that are willing to take jobs and to change the way that the structure is being done. So I think that's probably the second most critical reason. So, and there could also be something that could be just terribly hard. I think it's actually going to be very hard.
No.
I mean, it's already been hard for me anyways, but it's not been that hard. I mean, it hasn't happened yet though. Like these two things we're coming out with, I think will be extremely disruptive, but I think that they're going to take time. I mean, one of them I think is going to take 10 years, and the other one's going to take probably 3 to 7. So.
Go ahead. Yep.
So you talked about your big cojones and everything. So how do you see yourself, like your transition from when you were young?
I use Spanish to kind of hide maybe things that could be offensive to non-Spanish. My wife is Latina, so.
But anyways, just like being young and kind of like risk averse and like obviously being super levered, how did that change throughout your career? Now that you have means, do you still lever up, and kind of what's your view on that?
Yeah, well, I've never, so when I was young, did you say, was I risk averse? Or?
I'm assuming you weren't risk averse. When you were
Yeah, I mean, I think for you guys, I think like you should not be risk averse when you're young. You should go long equities as much as you can. Go long on yourself, that's the thing. Like bet on yourself and just go as long as possible. Like when I was saying like take half the salary, who the hell cares? That money after taxes is nothing. The learnings you have is everything. So that's your equity really. So, but how have I shifted that? I mean, since I have such a long-term plan and I'm working on that, I'm still extremely to the wall and pushing things very, very hard. But I'm not stupid. Like I was straight stupid like when I started. You know what I mean? That's the difference. I was just very dumb. I didn't know a lot of things. I didn't know I was at the top of the market, man. I remember thinking I remember being at like some horse race in like Saratoga with some of my partners, and we were just like living it up. Like we're just like I'm like the unstoppable businessman 3 years in. You know what I mean? And then it was like, fast forward 1 year, I'm like completely broke, negative millionaire. I didn't know what the hell I was doing. I was just, you know what I mean? Just, everybody's a genius when the market's going up. And I started seeing that with people too. That's why I shut down the private equity shop, is everybody thinks they're an A player and they think they're unstoppable when the market's coming up, because it's good times for everybody. So you don't know who's really the person that's the best, actually, until it's hard. Then you figure out who's got what it takes.
Is there value in being naive, though? Sometimes I think that because otherwise you would develop risk aversion, right? So to some extent, I look at the successful entrepreneurs and I think that they can be naive sometimes about risk, or they don't, or maybe I don't have that right, and then they succeed because they try, whereas everybody else simply wouldn't.
Yeah. I would say, I think believing in your intuition, I would say, is definitely, and not having preconceived notions allows you to have a better, more pure intuition about how something can be done differently. And then having tremendous guts to go in, I would say, especially at your age, just have crazy amounts of guts, no matter what. But then knowing kind of the pitfalls is probably just going to help you, right? You're just going to be more successful than less. You're still going to get your leg blown off anyways in 3 years. So, but you just don't have to have a complete disaster. Well, maybe you will anyways, but I don't know.
So maybe you can go back to when you were sort of the first, part of your career. How do you raise money? Like, what's the 3 sort of keys to success of raising money? And you maybe look at that across your career and all of your experiences.
Yeah, and this could go back to, I think Simone was saying about the, figuring out target audience, or Sam had mentioned that as well about customer segmentation. I think, you might want to do the same thing when it comes to capital. Like think about your audience. First of all, think about who has money, who doesn't have money. Figure out who's going to be more amenable to what you're bringing to the table, and narrow down your audience. Especially now that everyone's got capital. Every group has tons of capital. They're all just like, they can't, the other thing is know what's in it for them. So I always have the 2 things I try to figure out is, I'm even trying to figure this out like live with you guys. Unfortunately, I'm just doing it live though. So I'm trying to figure out like what's in it for you guys in this talk, right? Like I'm trying to serve you with some real value, but like I have to figure it out live, like hearing your questions, thinking about what would be good to say that you would be helpful for you, So, but thinking about what's in it for them, the VC or whatever, if it could be real estate funds, then it depends. But say if it's a VC and it's kind of that person coming out now, the real estate background where real estate's not been tapped yet, well, that could be interesting. The person's going to the real estate. Then it's for them, it's differentiation. They're differentiated. And they almost want to convince themselves of it anyways, because they got to get out like $100, $200 million of capital. So, and each one's going to go out like $1 million to $3 million in checks, right? Now that's what like seeds are at. That's pretty small. So they're going to do that like, a lot of times. So they can't wait to be convinced. You just got to convince them. And they're making fees off that money. Just getting real talk, like I had a no fee structure in my other company, but that because I wanted to focus on equity, but then I demanded a huge promote. I got like 50% promote, which is completely unheard of. And I think promotes are like 20%, but I got a 50% promote, but I took no fees. So I actually went negative a lot of money as market was going up, but I was betting on myself, betting on my intuition in 2008, 2009. So, which turned out to be, I'm a genius. Nah, but it turned out to be kind of somewhat lucky, somewhat kind of just playing to strengths at that point. But I think if you're looking for money, say you're looking for a VC, I would just look at who's going to be amenable to real estate, who's looking for differentiation, who's got capital, and narrow down your list, and then figure out angles in, how you're going to get to that person. If you can come through a warm or some warm, I mean it's third level removed connection, that's still going to be better than nothing. And then just get after it, and try to learn as you go about, what's not working, what is working, stuff like that. And then change your strategy quick if it's like not working and you figure out, well, maybe I got the customer segmentation or the target audience wrong on this. And you keep moving. You might have to go with like friends and family for the first amount of money and like people I mean, I was getting money from like all sorts of people, man. Like $5,000. It was like like really small amounts. I'm serious, man. I was getting like $5,000 from like random friends of mine and just cobbling together money. I'm talking like it ended up being like $1 million. There's like a lot of people on that list. So you can make it happen even if you don't got the connects or even if you're not thinking about it like in this way, which is smarter. There's tons of money out there. Go to the sources of the money. If you're just straight grit hustle, you'll still get the money.
So Faison, you're the last guy, and then I got one more to conclude here.
Sure. So it seems like a lot of the innovation in real estate and prop tech is more on the services side of things, and Trustwork I think is an example of that. But are there any companies you think are doing really cool stuff on the principal side, and what type of like shape and form does that take?
Well, I mean, Opendoor or Zillow looks like they're getting after stuff, and that would be kind of the principal side in a way because it's the buying and the selling of the assets. Really, if you look at are you familiar with Opendoor by any chance?
No, but that would still be sort of services, right? Like brokerage is a service for the principal. So like in terms of like
no, but
actual,
it's not
product types and like investing and that sort of thing.
Yeah, well, no, but that's the thing. It is actually like it's more the better way to look at that. What they're doing there is they're like a big. This is the way I look at it. I think it's more accurate. It's probably like a big private equity shop, and they buy and sell houses. So they'll like buy it, say if $100,000 for the house or whatever in Phoenix. They have a bunch of stuff going on. This is how I understood it when I heard it. I just kind of mental modeled it to that. It's like and this is what they do. I'm pretty sure, but someone might know better than me. This is not my area. They'll buy it. Yeah. So say they buy it for 100, and then they know that they get it for 100, and likely they can flip it for 103 quick. So they make like a quick $3,000 spread. So it is like an investment model. Now, what they're doing is they're trying to eat the brokerage commission and make that spread on scale. So their play is it has to be done scalably. If they can do it scalably, they can make on scale, possibly 6%.
Is there any similar like company doing something on the commercial side of things?
No, that's a good point. No one's doing that, so maybe that's Faison. Faison's going to do that one. Yeah, I'm not familiar with it. I'm sure there is actually. Almost every idea I've ever come up with, I can find someone trying to do it somewhere.
Well, and that's what I struggle with is why hasn't somebody cracked that nut already? You got all these smart people on the West Coast. Like, how the hell has somebody not figured that stuff out?
Well, it could be just because WeWork is turning out to be a fraud and people are getting scared. No, I'm kidding about WeWork. But WeWork is in the space, so they're trying to crack commercial. Actually, now that my brain got back alive, is WeWork is essentially like taking landlord type risk and trying to make a spread, right, through operational. So they take the landlord type risk and try to make a spread through superior management or whatever. Now, what I don't like about their model is, and why I would never be an investor, despite any of whatever the hell is happening now. I was joking about that, and I'm sure it's great leadership and they're trying their best. Things happen. So, but is what I don't like about their model, though, is I'd rather own the real estate because at the end of the day, if they figure out a smart way to drive up those cash flows, you know, who owns the underlying asset still? Is the landlord does. So eventually, someone else can copy WeWork on whatever they figure out, drives up the cash flows on how to do commercial office space, and that can be copied and taken. So they're kind of taking landlord-like risk, but the ultimate tail on real estate's a very long-term asset by nature. The tail is captured by the real estate. This is my reasoning, but I could be wrong about it too. So I don't want to dissuade you from buying WeWork shares when it comes public.
Well, you know, Artie Menson is the president and COO. He's an alum of Georgetown.
Is he? No, that's, I mean, it's a great company. I'm sure that, yeah, it's good. You know, the other thing is I don't, like a lot of times I'll think like, I don't think something's going to work, and it does work. And this could be a case with WeWork where it ends up crushing it. You know what I mean? So it could be an absolutely brilliant strategy that's going to crush. And I don't see things, man. Like I would never have thought Donald Trump would be the president. I thought he was, I'm not, you know, I mean, I thought he was like a playboy or something. I'm like, what the hell? He's now like a Christian. Right. So who knows what can happen?
So if I sort of think about what I've heard from you and how to distill it down into a word, I mean, I feel like you're a learner, right? Like you talked a lot about how you read, and you read a lot, and you learn very quickly. So we have these young people that are generally in some stage of their learning process. So what would you, if you got to go back to undergrad or you're a freshman, you got to go back to business school, and you had time to really be selfish, right? You know, what would you be doing?
Yeah, I mean, so I guess it depends what I wanted to do. Figure out what you want to do first, and then what you're going to do comes next. But say what you want to do is jump into business when you get out of here, right? So coming in, I mean, getting exposed to some ideas like this talk, I mean, take it for whatever it's worth, but I'm sure you'll get some things out of here that are probably a little bit different than you've heard elsewhere. But I think, you know, reading's good. I do read a lot. But I think also more important would be you're in an institution where you're paying a ton of money, right? What the hell are you paying for? Partly it's very smart people you're paying for to be around, like the people, your colleagues and stuff are screened out. So you're getting really higher caliber people here. So I would say pick off like the smartest people you can find to try to keep a relationship with and be friends with. I'll give you an example of that. Like when I was at Harvard, once I was at Harvard Law School, so I Georgetown undergrad, but I'd kind of learned that, got that idea. I was like, why the hell didn't I do that better, you know? So when I was at Harvard, I actually I used to get notes from people. I had a system. That's how I was able to skip all the damn classes, which I'd highly recommend if you ever go to Harvard, never go to class. At law school, complete waste of time. So you get the degree, it's worth the same amount. So anyways, what I had a system of getting notes from people and buddies of mine and stuff. So, but from there, I asked them independently, give me the five smartest kids in the class that you know, because they're always at class to hear everyone talking. And from there, there was repetition on a few of them, so I was able to cull that down. And then I had coffee meetings with them without telling them what I was meeting about. And from there, I picked off one of them who's still partnering with me for 10 years. But I think just, you know, think biggest, go for the smartest people you can. I mean, I would say also highest integrity. And anybody who's got bad integrity, man, just like it's like you just don't want to be around that person anyways. Why would you even want to be friends with them? They're not a friend. They're like a person you're trying to help, but you don't want to keep them in your ecosystem, right? So.
Well, Peter, thank you very much for your time.
Thank you, Matt. Appreciate it.
So anytime you're back in DC, we'd love to see you. I'm sure that, students want to chat you up a little bit, but I don't know when you got to go, but don't be bashful about saying that.
Yeah. We're going to probably head out here soon, but yeah, if you guys ever need, you know, you're looking for something or you're interested in, I don't know, one of the things that we're doing at some point, you can always hit us up. You can get me at PeterX on Twitter is probably the best way. I don't necessarily manage those accounts, but those emails will eventually get to me. So thank you, Matt. Appreciate it. All right, guys. Thanks for your time.